The two most important companies in the world just reported earnings. Here's the report. ASML and Taiwan Semi are the foundation of the vertical stack for creating and manufacturing semiconductors. But why are they the most important companies in the world? Well, semiconductors are essentially the building blocks and brains of technology. Therefore, advancing technology, or really any advanced technology, is dependent on these chips or semiconductors. Seems important, right? But let's go a step further. There's something called Moore's Law, which helps break down the progression of advanced chip technology. Essentially, in order to make these semiconductors better and more efficient, to advance technology, you need to increase the numbers of transistors on a chip. The law states that the amount of transistors that you can pack into a chip doubles every single year, allowing for more efficient and cheaper technology. Sounds great, right? But actually doing this is probably the most complicated thing in the world. If you ever want to be absolutely blown away by how smart some people are, look no further than ASML or Taiwan Semi. These two companies have the strongest competitive advantages you could ever imagine. Not only is it simply too complicated to do, it costs too much money, too much time, and too much in research and development just to try to figure out where they're at today. But these companies always continue to move forward and improve their process further and further, making it tougher and tougher to compete with them. Now, you're probably thinking it can't be that hard that there's only one company in the world that can make these machines, right? And there's definitely not one company that just has the ability to manufacture these chips, correct? But it is. Let me start by just explaining how an ASML EUV machine works, and get ready to have your mind blown. So what ASML actually does is they etch the transistors into the chips, or they create the machines to do this. The way to progress and get more transistors onto a chip is to reduce the space in between those transistors on the chip itself. Makes sense, right? Reduce the space in between, be able to fit more transistors onto a chip. Not too bad. But this is where it starts to actually get crazy. And shout out to the Acquired podcast for doing an amazing job of really breaking this down. So as of today, we are down to 2 nanometers in space between transistors. Just to put that into perspective, that's about the strand of a single piece of DNA. How do they do this? Well, you start with creating plasma. On one side of the machine, you have molten tin, and on the other side of the machine, you hit it with a highly specialized laser. You perfectly pulse them, and this explodes into plasma, creating the extreme ultraviolet light. Pretty crazy, right? Now, to go a step further, you have to do this 50,000 times a second, but you also have to hit the tin with more accuracy than the Apollo mission's calculations to send a spaceship to the moon. 50,000 times a second. The wavelength created from this is so small that it's actually absorbed by all known mirrors known to man. Due to this, ASML actually had to make a specialty mirror and contract out a specialty laser that both are only able to be made by one company in the world. This laser is then reflected a thin film of highly purified water that is in between the lens and the chip itself to continue to refine the wavelengths. Okay, so that is generally the mind-blowing machines that ASML makes, and they run for about $200 million a piece. Plus, they only make about 50 or so a year. Want to buy one? Good luck. Taiwan Semiconductor has bought out all of them for the next few years, again speaking to the large competitive advantage that they have here. But even if you got a machine somehow, you would have no idea how to use it or really where to even begin. Taiwan Semi has the most advanced manufacturing process ever known to man in order to be able to create these chips, and especially at the large scale that they do. And they leverage these ASML machines to be able to make those chips. Taiwan Semi makes all the leading edge chips for your favorite companies like Apple, Nvidia, Broadcom, etc. Okay, now that we have a little bit of a background on why these companies are just so important and so impressive, let's dive into the actual reports. Just a note, ASML is a European company from the Netherlands, so their metrics are going to be reported in euros. ASML reported first quarter revenue of 7.7 billion euros, which slightly missed analyst estimates. Gross margin came in at 54%, and net income came in at 2.4 billion euros, which beat analyst estimates. Net bookings, a key metric for their backlog, came in at 3.9 billion euros, missing analyst estimates of 4.4 billion euros, which is a key of ASML's backlog. Again, a key theme to this earnings season is if companies are giving guidance or not based on the geopolitical and global trade uncertainty. ASML, however, did give guidance and reaffirmed for the full year. Guidance remains at 30 billion euros to 35 billion euros, and the higher range is dependent on AI demand continuing, which they see. Guidance for the full year remains at 30 billion euros on the low end to 35 billion euros on the high end. On the low end, ASML sees this number going to 30 billion if customer uncertainty picks up due to tariff uncertainty. On the high end, ASML sees 35 billion euros through continued demand for AI and machines. Guidance for Q2 sits at 7.2 to 7.7 billion euros, with a gross margin of about 50 to 53%. This is a wider range in revenue and margin than ASML typically gives, but again, due to the geopolitical and uncertain backdrop with tariffs. Second half of the year, they do note should be a bit lower on margins, but should be higher on revenue recognized. And they also paid out €1.52 per share. ASML bought back 2.7 billion euros in shares, and they also paid out a dividend of €1.52 per share. In terms of their cash position, ASML is sitting on 9.1 billion in euros, and they invested 1.1 billion euros in R&D this past quarter to continue to strengthen their competitive moat and their technological advantage. ASML CEO Christophe Fouquet notes that AI is the key driver and demand stays extremely strong. The semiconductor industry as a whole, driven by AI demand, expects revenue to exceed $1 trillion by 2030. Helping to fuel these advancements are the 2-nanometer chip technology that is being brought online by companies such as AMD. ASML's install base is also continuing to grow, and they're getting a healthier mix of their EUV machines or their higher cost machines that we mentioned earlier in the video. But again, the key growth driver here is AI, and that is the focus of this report. And that will continue to lead ASML to a growth year in this year and next year of 2026. Within AI, inference is going to be a key driver for the actual uptick of AI adoption and AI demand. This is a key reason why the company sees demand for advanced technology, which will end up requiring more demand for advanced lithography. But one analyst asked an interesting question on China developing their own EUV technology, trying to make it so that ASML isn't the only player in town. ASML did note that news coming from China is more research-related news and not actual product news, and there is no proof that China's really made any strides in the EUV technology. Therefore, China, or really anyone else, is still many, many years away from having any type of advanced lithography technology. Now, let's move on to the company based just outside of China who uses ASML's machines to manufacture and make at scale the world's most advanced chips. Taiwan Semi reported a strong first quarter. Revenue of 25.5 billion, which slightly beat analyst estimates, but decreased 5.1% sequentially due to seasonality within smartphones. Gross margin of 58.8% and operating margin of 48.5%, both slightly impacted by an earthquake within Taiwan in the quarter. And operating expense came in at 10.2% of revenue. Net profit of $11.1 billion also slightly beat analyst estimates and was up 60% year over year. Return on equity came in at 32.7%. And in terms of cash position, Taiwan Semi is now sitting on $81 billion in cash, and they remain committed to steadily increasing their dividend. CapEx for the first quarter came in at $10.06 billion. Again, showing the significant competitive advantage of this company being able to put up incredible amounts of spend in research and development and advanced technologies such as ASML machines, with advanced process technologies coming in at 70% of their CapEx. Due to this competitive advantage and widening moat, Taiwan Semi will continue to be the lowest cost provider and the most efficient producer of chips in whatever geography they're in. In terms of guidance, again, a key point this earnings season, Taiwan Semi sees Q2 revenue of 28.4 billion to 29.2 billion, with sequential growth of 13%, and year-over-year growth of 38%. They also reiterated their CapEx budget, coming in at anywhere from $38 to $42 billion for the full year, again continuing to strengthen their technological advantage. They also noted that their higher levels of CapEx are associated with the greater opportunities of growth ahead of them. Their guidance is also reflecting no change in customer behavior, even due to the global uncertainty and tariff policies. Gross margin for the year, they expect anywhere from 57 to 59%, and operating margin anywhere from 47 to 49%. These are actually guided slightly down due to Taiwan Semi extending out their manufacturing into the US and building out Arizona fabs. They also noted one of the key pieces to Taiwan Semi's business model is to have such high margins so that way they are able to continue to reinvest into the business to maintain that moat that we spoke about earlier. But for breakdown of chip revenue, majority of the revenue came from advanced technologies, which would be defined as anything with 7 nanometers or below. And again, this is because Taiwan Semi is really the only company that has the ability to make these chips and this advanced technology. For advanced chips, 3 nanometers came in at 22% of revenue. 5 nanometers was 36% of revenue. 7 nanometers ended up at 15%. And Taiwan Semi also noted that they expect their strongest growth in the 3 nanometer and 5 nanometer areas. And even past this, in terms of their most advanced chip technology, again, Taiwan Semi is now moving on to 2 nanometer chips, which they say will have a faster production ramp and higher demand than their 3 nanometer and 5 nanometer showed in the first 2 years. Now, moving to platforms for this advanced chip technology, high performance computing continued to be a standout, increasing 7% sequentially and now makes up 59% of Taiwan Semi sales. Therefore, it is important to note here that NVIDIA is actually a larger customer for Taiwan Semi than Apple, which is a huge milestone for AI chip production versus smartphones. Due to this, they continue to see robust AI chip demand and AI accelerator revenues to double in 2025. But Taiwan Semi also speaks to some recent developments in inferencing and AI, and the positive long-term AI demand stemming from the move to reasoning models. Revelations from DeepSeek are also helping to drive greater efficiency and reduce the barriers to AI development, all of which leading to greater demand and adoption for AI models, which all require more advanced and leading edge silicon. But speaking to the numbers which investors want to hear, TSMC is confident in AI accelerators having a CAGR or compounded annual growth rate of 40% for the next 5 years. Therefore, the main takeaway from this call is AI chip demand is just absolutely insane. But this is especially true in the US, and one key reason why Taiwan Semi is investing up to $165 billion in United States manufacturing. They already have a fully operating fab at high volume production, and their second fab is in the works in Arizona for advanced chips. They plan to have a full AI supply chain with 3 wafer fabs, 2 advanced packaging fabs, and an R&D center all in Arizona. After this is all completed, they expect to have 30% of their advanced capacity coming from Arizona. This is extremely important to build this advanced technology outside of Taiwan to try to hedge some geopolitical risk. Now, although they do remain fully committed to expanding and developing manufacturing in the US, they did note on the call that they shot down rumors of a joint venture with Intel, which popped up about a week before the report. But in terms of the tariff picture, the semiconductor industry in general did recently get hit and sparked a bit of a sell-off due to the restrictions of the H20 NVIDIA chips going into China. H20 chips were essentially NVIDIA's scaled down chip that was able to be used for China. Although even with these recent restrictions, Taiwan Semi did say there is still no change in customer behavior and any gaps in demand coming from China and the 20 chips would be easily filled. Now, in closing, ASML and Taiwan Semi are 2 incredible and important companies that the entire world relies on. They have the greatest competitive moats that you could imagine, and they only become more and more important as we advance technology. The key takeaway from these reports is that AI demand is unlike anything we've ever seen before, and it continues to get stronger and stronger. If you'd like to stay up to date on any reports like this, subscribe and leave a comment below on a company you'd like to see covered. Like this video if you found value in these reports, and as always, these are just my opinions, not investing advice.